definition of terms. So some of the terms we need to define here include the term group. So basically when we talk about the group here, we are referring to a group of companies. So what is a group of companies? A group of companies basically, this refers to a parent company and its subsidiaries. The parent company and its what? Subsidiaries. So mean that if, for example, you have a parent company having like 2 or more subsidiaries, or even a single subsidiary, then the parent company and its subsidiary, all its subsidiaries, then we can refer to that as what? A group of companies. So therefore, you can say that this is a parent company and its subsidiaries. So the other term we need to define here is the parent company. The parent company. Remember, in our introduction, we have mentioned what is a parent company, which we have also referred to as the investor company. So we have said that this is a company which has invested or which is having some interest in other entities. So a company is deemed to be having some interest in other entities, whereby that company has invested in other entities by acquiring shares. By acquiring what? Shares. But in this case, we can say that the parent entity, we can say that this is an entity an entity having a control over another entity which is now known as a subsidiary. The other term we need to define here is the subsidiary. Subsidiary. So when we talk about a subsidiary company, we can say that this is a company now which is controlled by the parent. The parent. So we say that this is an entity controlled by the parent. Parent entity. Essentially, what you have said here is that a company will be controlled, or basically a parent company will be controlling another entity, whereby the parent company holds or has acquired shares which lies between 51% to 100%. 100 what? Percent. Meaning that the parent company is in a position to control the composition of the board of directors of the subsidiary company by appointing majority of the directors of the subsidiary company. And number 2, we have said that the parent company is the one which controls the operating and financial decisions made in the subsidiary company. And therefore, we are saying generally, a parent company will be having a control over a subsidiary if the parent company acquires shares lying between 51% to 100%. So and then from there we can also define the other term here, number 4, and that is the term business combination. Business combination. So when talk about business combination, this is the transaction through which the parent entity acquires control over the subsidiary. For example, in this case, if we are told that A Limited here maybe acquired like 80% of the ordinary shares or equity shares of B on 1st of January 2024, that particular date when A Limited acquired majority of the shares in B, then we refer to that transaction as a business what? Combination. That's why we are saying a business combination here is a transaction through which the parent entity acquires a control. A transaction in which the parent entity acquires control over subsidiary company. So the other term, number 5, is non-controlling interest. Non-controlling interest, which is abbreviated as NCI, So what do we mean by NCI, non-controlling interest? So basically this refers to the shares issued by the subsidiary company and which are held by the minority shareholders. Like in this case, let's assume that you're told that A Limited here acquires 80% of the shares issued by B Limited. So it basically means that A Limited here will be the parent company, because you can see the parent company controls, or A Limited controls B, and then we have now the remaining 20% of the shares which are issued by B Limited. So those 20% of the shares issued by B, then in this case we say that they are held by the minority shareholders. So why do we refer to these other shareholders as the minority shareholders? Generally, we know that in a company, decisions are made by the majority shareholders. So therefore, those shareholders who hold just 20% of the shares issued by the subsidiary, they cannot control the operating and financial decisions made by the subsidiary, that is B Limited. They do not have now the powers to control the composition of the board of directors of what? Of B Limited. So therefore we say they have some interest in B Limited, but their interest is a non-controlling. They can't be able to control operating financial decisions, and also even they cannot be able to control the composition of the board of directors of B Limited. So therefore we say NCI that these are shares, and specifically we are talking of equity shares. These are equity shares issued by subsidiary company, not held by parent company, not held by the parent entity, not held by the parent entity. So therefore, shares issued, or ordinary shares issued by the subsidiary company, not held by the parent company. In other terms, we can say that these are those particular shares which are issued by the subsidiary company and which are held by who? The minority shareholder. So therefore, the interest of the minority shareholders in a subsidiary company, we refer to it as NCI, non-controlling what? A non-controlling interest. So therefore, these are basically some of the terms you need to know. As far as the investment in a subsidiary is concerned, you need to know what is a group of companies, which you have said is a parent and its subsidiaries. The parent company, you have said, is a company having a control over the subsidiary. Subsidiary company, you have said, is a company controlled by what? By the parent company. And also we have said that transaction through which now the parent company acquires a majority of the shares in the subsidiary, that transaction we refer to it as a business combination. And also here we have also been able to define the NCI, non-controlling interest, which you have said these are shares in the subsidiary, shares issued by the subsidiary, but which are held by the minority shareholders. So I want us to stop at that particular point. So once we come back in our next session, I want us to look on some of the accounting standards which are applicable during the preparation of the group account, or the preparation of the consolidated financial statement. And then from there, we look on some of the specific standards, starting with IFRS 3. We see what IFRS 3 says, and then from there, we proceed to the other standards. So therefore, see you in the next session.